Hello traders, Gary Wagner here, just about 10:45 in Honolulu, 3:45 in New York. It is Wednesday, March the 2nd, 2016, and this is the daily report for gold and silver. We do have the precious metals markets trading higher today. Moderately strong rally continuing in gold, currently trading up about $8 to $9 on the day, 1240.61, 1240 and a half, roughly in that area. Now the high is 1244.07. But what is really important is the low on the day, which came in at 1224.95. Our stop, we placed below 1226, so that's at least a 1225, if not 1224. So very, very close on hitting the stop, but luck did prevail, at least today, and we are currently still long from our position at 1217. So traders, as I said, I did want to talk about the stop that we put in, rationale behind the placement itself. As I said, low was 1224.95. That, of course, is Forex. When we look at COMEX, it was 1225.10. So in either case, by putting it below 1226, we did manage to find some safety. Now, reason for me placing the stop below this 1226 point, and one thing that I do want to say, you will see me word stops in two ways when I say below, either below or just below. Just below is simply when I'm really tightening the stop up and I'm actually looking to get out of the market and pull profits. Below means that I've identified that particular price point, in this case 1226, as a critical support level. So you want to place it below with enough flexibility so that if it does tick $1, $1.50, $2 below that, you still maintain your current position. So I did want to clarify that, but this particular fib retracement that we're looking at, we're fixing our bottom at about 1109. You can see that it's a resistance area there, a support area here. We've also talked about throughout the last couple of months that 1108 being a very, very critical area. So that is one of the reasons 1108 comes in as a very, very major fib retracement point. So when we take that as our starting point, up to the most recent highs coming in at around 62. Our 23% retracement level is 1226.88. And that's where that number 1226 came in. My sense was that we should hold these lows if we are going to continue to track higher. And what I mean by that is if you take a look at these lows that come into the market, this of course is a very, very short-term chart, 240. In fact, let's go ahead and erase that, and start again. But if we just follow these lows right in here, that's another rationale for placing the stop in that area. In other words, if this market is going to continue to rise, we should have a succession of higher lows as well as higher highs. Now, we've gotten the higher lows in the equation. We can see that coming in these various price points. And then all we really need to do is to match it with higher highs. However, that hasn't been the case. We reached this high at 1262, comes down, and we've got a series of tops that are coming in roughly from about our current price, which is sitting at around 1241, up to 1250, where I'm really pegging our current resistance at. As you can see, we've had a series of tops come into that area. So right now, when we look at this market, the characteristics is really what we call a flat top and a ascending bottom. So traders, as you can see, we're currently trading up about $11 on the day at 1242. This, of course, is COMEX, and as you can see, low on this one is 1225.10. But we're looking at our weekly chart, and on this weekly chart, we absolutely have really our long-term vision of the market. We can easily see this 1250 right in here as our current level of real resistance in the market. We certainly see how the market has bounced off of these recent lows, and we have a significant bottom in the market, but really 1300 has been my target on this particular trade because that's really the next real area of any kind of major resistance. We have our first resistance area, of course, at about 1250. Now, if it cannot make it through 1250, we have stops in place. The market will backtrack and take us out. Our next real course of action, our strategy right now, is to see whether or not this market has the ability to track and trade above 1250. Because if, and I should say that when or if it does, we don't really have any real level of resistance up until 1300. So our basic strategy would be that if this market does, as you can see, it's moved up, it's absolutely consolidated, these being weekly charts or weekly candles, excuse me, but it's absolutely consolidated in this area. Should the market be able to break above these highs at 1250, I believe that that would become the new level of support. And so what we would look for is to basically move our stop above this particular price point and look for it to track, as I said, as high as about 1300, and that comes in and matches these particular tops here. This has been Gary Wagner wishing you, as always, good trading. Maintain your current long position, maintain your current stop. We'll talk to you tomorrow for another daily update and review. Bye-bye.